All right. So up next, we have David Olsson, VP of Institutional Distribution for BlockFi. He and Bryan Bodner are going to be talking about trends in institutional adoption of digital assets. With that said, I am going to um, allow you guys to start with video. And I am going to spotlight your video.
Great.
Perfect. So guys, welcome to kick it off.
Sure. Thanks so much,
Thank
Michael. Great. So hello, everybody. Pleasure to be here. So you're joined by myself, Bryan Bodner, who is on the private client team at BlockFi, as well as David Olsson, who is our head of distribution for all of BlockFi.
Hey, everybody. How's it going?
Great. So to jump right into it. So first of all, thanks again, Bryan, for the last presentation. That was great to catch the end of it. And as you kind of saw in some of those charts from the last presentation, the price in 2017, which is probably the last time a lot of people in this audience were really paying attention to Bitcoin or hearing a lot about it. The price is pushing 20K around then. Today, we're sitting around $35,000 in the price of Bitcoin. And we really want to talk about the trends that we're seeing from our seat and some of the adoption on the institutional side and what's taken hold since then. So Dave, would you mind giving our audience a bit of background on Bitcoin and what's different today versus how things were 3.5 years ago?
Sure. Thanks, Bryan. And thanks a lot, Michael, for inviting us here. I think there's been some fundamental changes since 2017. In 2017, there was largely a retail-driven market. I think the infrastructure for institutions to come into Bitcoin hadn't been established yet. So you had some exchanges. There were some well-known hacks, such as Mt. Gox, and there had been others. So safety and security were questions. I think there was also the kind of quotes coming from Jamie Dimon and others about the provenance of Bitcoins, whether they were being used for drugs or terrorist financing. And all of those things have been addressed in the last 3 years. So everybody's been hard at work, and there's some really passionate folks in the community. And basically, in terms of safety and security of assets, you now have custodians like Fidelity, who BlockFi partners with, to provide financing for institutions. So Fidelity's built a custodian, very well known household name, and there are others in the market that have similar balance sheets. They're looking at it. You have Standard Chartered that has started a crypto custody platform as well, and then DBS in Singapore, which is one of their largest banks and bigger than a lot of the household names of banks in the U.S. actually, or in Europe, has also established a crypto custody business. So there are institutional players in the space that have developed technology to service Bitcoin and other assets. I think the other hot button that I talked about was the AML KYC piece, and there's been technology developed such as Chainalysis, which is a company where you can track back the provenance of a Bitcoin from the time that it was created or mined by a Bitcoin miner all the way through its different wallets. And you can see how many wallets it's been through and whether there's been any kind of nefarious activity. So at BlockFi, we use Chainalysis to analyze all the coins that come on the platform and make sure that they all have good provenance. So those, I think, and there was a famous case that the FBI cracked of someone in Florida that was paid in Bitcoin, and basically they were able to track down this, someone that had done some hacking and gotten paid for it by being able to track back the Bitcoin. That's something that you can't do with dollars and Chase Bank or in any other bank. So Bitcoin and blockchain technology has a huge advantage in that sense. And there's people starting to use it, and obviously a lot. We just saw Visa's in the news that they're looking at very closely at cryptocurrency technology. And we also had the OCC. We had regulators Sorry to go on about this, but it's been a long year in terms of with a lot going on. We had the regulator, the OCC, which regulates all the banks in the U.S. as part of the Treasury, say that banks can hold cryptocurrency and they can also use blockchain payment rails. So it's been a big year for Bitcoin and crypto and institutional adoption, and building that infrastructure for institutions to come in.
So one thing you mentioned there, Dave, was you mentioned a few years ago, for example, that JP Morgan and Jamie Dimon specifically basically came out admonishing Bitcoin, saying it was a fraud, it was a scam, and anybody found trading Bitcoin, they would be fired. And now you're seeing that actually they had a recent price prediction for this year of around $146,000. So as our esteemed head of distribution here at BlockFi, you see obviously a lot of the conversations, or all the conversations, of these legacy institutions who previously kind of stayed away and now are starting to enter that space. And it really speaks to the maturation of the asset class and some of the changing narratives around it. One of those narratives that's really brought in a lot of the some of the macro hedge funds and some of the big family offices is this narrative surrounding Bitcoin as a store of value. What are your thoughts on kind of what gives Bitcoin that competitive advantage versus other traditional store values like gold, for example?
That's a great question. I think that there's a few things. So number one for Bitcoin is it's a defense against devaluation of currencies, right? Of fiat currencies. So it has a fixed number of coins that can be issued. It's a technology that has never been hacked, although endpoints on the chain have been hacked, like Mt. Gox or others have been hacked. You never had the network itself hacked. So it holds up, over the test of time over the last 12 years or so through a lot of stress. And so that the finite number of coins, and we've got 18 million that have been issued so far, gives it that property of real scarcity. So I think that's one thing in an era of monetary easing and helicopter money. The second thing is that it's the ease of which it can be moved, right? So it's not necessarily the best way to make payments right now, because you can only do 4.6 transactions per second on the Bitcoin network, unlike Visa, which is tens of thousands. But it does, it is able to be moved, unlike gold or other real assets, which take time to get. You have to make the bars. You have to, and during the COVID crisis, actually, a lot of the smelting plants we're not able to move gold bars. So whereas Bitcoin can really be easily purchased and moved, and it's easy at this point. Everyone, from children on up to grandparents can or retirees can find an app where they can purchase Bitcoin. It's pretty easy. And I think that the third thing is just in terms of demographics. So people that are millennials and below are digital natives. They grew up with technology. Things like gold might, thinking about gold and stuffing it under the mattress or using it in a time of war as an inflationary hedge is foreign to them. So they're going to reach for something that they know. And I don't know, Bryan, I'll turn the question back at you because you're probably closer to the age of the people that I'm talking about. What do you think? Do you think that do your friends talk more about gold and silver and platinum, or do they talk about Bitcoin? And What do you think about adoption?
Yeah, sure. So 100%, I can confirm that virtually nobody I know, and regardless of what industry they work in personally, speaks with any enthusiasm about gold. There's definitely, in my seat, obviously my friends and people in my circle know that I work at BlockFi. So as we kind of started creeping up in the past few months or so to new all-time highs, start to see more people with interest. Something that's really interesting here that I don't think enough people talk about is Bitcoin's standing as what appears to be a Giffen good, which, like in economic terms, means that it's a good that typically, like a normal good, would have less demand the more expensive it gets. But with Bitcoin, what we've seen historically is that it actually increases demand as the price goes up. So I think it kind of creates this feedback loop of the higher the price goes up, the more legitimate it appears, and the more kind of demand we see, both institutionally and at the retail level, especially with certain demographics like Dave mentioned. There's also another point I wanted to mention with regards to the scalability of Bitcoin that Dave mentioned, where right now the transactions compared to like a network like Visa is pretty low. Based on the kind of sound money principles that Bitcoin exhibits, we've seen a lot of layer 2 technologies that are being built on top of Bitcoin to improve that scalability, with Bitcoin as the layer 1 solution. So the most popular one we've seen right now is Lightning, which some of you may have heard of, which is being developed and again will make Bitcoin much more scalable and much more throughput for the transactions. One, we're starting to see some real world application of this, where some of you might have seen the news recently. Some professional athletes are now taking their payments, getting payroll through Bitcoin through this company called Zap, which is built on top of the Lightning Network. We're starting to see some other companies issue payroll through Bitcoin as well. And so I think it's an interesting point where right now, we're definitely seeing this store value narrative being the thing that really drives Bitcoin forward. But I do think that there's a natural evolution. The more money and intellectual capital comes to space, we're starting to see a lot of layer 2 technologies that are making it more scalable, where in the future, it could possibly satisfy that other property money as a medium of exchange and eventually unit of account. Right now, it's kind of like more of a digital collectible that is being more rapidly adopted as a store of value. But I think it's going to take some time to eventually get towards those other aspects of what money is and what Bitcoin can be.
Yeah, I totally agree with that. I think there are some people that say Bitcoin will never be used as a form of payment or a currency. I sort of disagree, because I think it's a matter of time, maybe 5-10 years, for the volatility to come down. I mean, you can imagine, look at, for example, sterling US dollar or euro US dollar. A big move on a day is like 1 or 2%. 3% would be crazy. There were some big moves, obviously, with Brexit for sterling, but I think that eventually Bitcoin could get to that place if you have enough institutional participation, from long-only institutions to family offices to arbitrageurs. It can happen. So I don't think anything's off the table yet. I think one of the other interesting things that I've heard about comparing gold to Bitcoin is from one of our investors, Anthony Pompliano, likes to say that gold is the analog version of a digital Bitcoin, or Bitcoin's the digital version of gold, whichever way you want to see it. And you've never seen a time in history where the digital version is worth less than the analog version. And so in his mind, I think he thinks it should be worth 10 times the market cap of gold. So the market cap of gold is 10 trillion right now. Market cap of Bitcoin is about 1 trillion. So you can see if it just makes par, it's going to be, have an increase of 10 times in value. And then an order of magnitude larger than that. And I think, everybody would be pretty, we'll see what happens anyway.
Yeah, sure. So something that our audience, with that in mind, with kind of Bitcoin's store of value, and speaking on, I mentioned like some of the payroll aspects that are really small right now, but starting to take hold. Yesterday, there was actually an event held by a public company called MicroStrategy, where they've purchased billions of Bitcoin to hold in their balance sheet instead of cash at this point. And they're basically educating other corporates right now, or like yesterday, on how they did this and why they did this. Dave, could you speak a little bit on the different roles that crypto is playing on institutional balance sheets right now from your perspective?
Sure. Obviously, MicroStrategy made and Square made big news with their purchases of Bitcoin as a reserve asset. And at BlockFi, what we have a retail client base. We have what are called corporate interest accounts for our corporate clients, and then we have institutions that do more sort of heavy trading with us. And I think those people in the middle, the corporates in the middle, we've seen just an explosion in corporates opening accounts at BlockFi to purchase cryptocurrency, deposit even stable coins, which are dollar-backed tokens, to earn a yield on them and start to build a bit of a treasury reserve. to the point where, we've had to like sort of an emergency, as an break glass emergency, hire a lot more people to be able to handle the inflows. So, and also, and it's happening, all over the world. It's not just in the US. We're seeing it in Asia. We're seeing it in Europe as well. And I think Michael Saylor is kind of like the chief evangelist of for the space. But I think some of people have been following Bitcoin for a long time might see the price right now, and they say, okay, I bought when it was 10,000. It's expensive now. Well, no, for new entrants, they see it as kind of the beginning of their journey. So in terms of the way that we look at for other types of institutions, we're also seeing some long-only asset managers on behalf of pensions or endowments looking at an allocation within the alternatives bucket, which is typically somewhere between 5 and 15%. So they will then look at Bitcoin. So they might have had gold and oil or other commodities, plus hedge funds, plus private equity stacked into that alternative bucket, and then they add Bitcoin in, and they might make somewhere between a 2 and 4% allocation to Bitcoin as an institution. Just a quick plug that we've recently opened a trading desk where to service these types of clients and be able to transact with them, hold their hand through the first 100 BTC or $1 million of Bitcoin that they buy, and give them a real white glove service.
Great. And with that in mind, so one of the things they mentioned in this corporate conference yesterday for MicroStrategy was not just why, but a lot of entities and individuals who are now convinced that they do want access in some capacity, they don't know how to get that access. They don't know how to physically gain exposure to this market. Dave, could you touch on a little bit as well? What are the avenues to access different private markets in crypto and get access to non-public deals or funds? And on top of that, how are some institutions getting exposure through different channels?
Sure. Here's what we're seeing in the institutional market. We're seeing some funds are comfortable where they feel like they can go and spend the time to open up a Coinbase account or a Fidelity account, and then purchase Bitcoin through BlockFi or another provider. And that's, it takes some time because for an institution, obviously they have to do proper due diligence. It has to meet sort of their vendor management requirements. It has to meet some capital requirements. So that can take some time, and it means kind of dedication to the space. What we offer and a few others in the space can offer is a one-stop shop solution where they can open up a BlockFi account. They may have to do the same kind of due diligence, but we can give them synthetic exposure to the asset class if they want it, in a format where they might be able to invest it in an index, through a swap or some other kind of derivative where they don't have access to the actual physical coin if for example, their mandate doesn't allow it. And I think that for those clients, futures might be a great option as well. They can buy CME futures, exchange traded futures contracts, where they also have synthetic access to the performance of Bitcoin. The only difference between that product is that right now it trades at a pretty wide premium to spot. And that means that you're going to be paying up for that same exposure. And one of the trades that we see a lot of our hedge fund clients do is they'll come in, they'll buy the spot, and they'll short the future and hold it to expiration so that they earn the premium or the basis, which is typically 10 to 20%. So that's really, so on the buy side, you have institutions for the futures or for derivatives, you have institutions that can't hold spot directly. So let's say, okay, let me enter into a derivative, and they're willing to pay up just to get the access. On the sell side, you have arbitrageurs that come in and say, I'm going to sell that futures contract or that derivative because I'd like to make that 10 to 20% yield, annualized yield.
Great. And like we mentioned a bunch of times at this point, we've seen a ton of adoption in the last year alone. So with that in mind, before we kind of wrap this up and open up for questions, where do you see crypto in this kind of entire ecosystem in the next, let's say 5 to 10 years? And what do you think is needed for further adoption?
Sure. My best guess is that we're going to see. I think the one problem with adoption is that it does threaten some of banks' businesses, because a lot of what crypto does on a very fundamental level is reduce the amount of fees that that people have to pay to move to move units of money around the world, and that could be stable coins, or it could be crypto. And so it's right now, but we're at a tipping point where actually there's about to be capitulation, and we're going to see the banks all come into the space in the next 5 years, and everything finance is going to be changed back to front, would be and that everything will need to run on blockchain rails. Crypto is 24/7. It trades 4.5 times as much as the New York Stock Exchange, for example, which is 9:30 to 4. So that's 4.5 times the amount of opportunity that you have. If you want to move money on the weekend to pay for something, or to settle, you can move money on the weekend at any time. And at BlockFi, actually, we have employees are awake 24/7 to service clients and settle transactions even over the weekend. So I think we're going to see that, that banks are going to have to adopt the same model. And I think that coins like Bitcoin, or units of currency like Bitcoin, are going to, it's a new world. It's almost, it would have been science fiction 5 or 10 years ago, but it could become, the currency of the world. And I'm not sure if that's 5 or 10 years, but it's somewhere, because it's obviously, safe and away from any form of central government manipulation or capital controls.
Yeah, and on that point, I think it's worth mentioning as well. We mentioned the OCC a couple of times. They've recently come out with a lot of favorable legislation for crypto. In light of that, we've now seen Goldman Sachs has announced custody solutions in the future. I think we're going to start to see a lot of other legacy institutions start to adopt and kind of blend the lines between a lot of what we do at BlockFi and companies like us, and what you see at these traditional institutions. I think it's going to be a lot of blurring that line between those two different worlds. And I think in terms of adoption, a lot of people ask this all the time. I think it's just a matter of like time. I think if you give enough time, it's already come so far in about 12 years. I believe that based on a lot of the reasons why Dave just mentioned, kind of that I personally see it as almost an inevitability. And it's just a matter of time and education to further increase that adoption. Dave, any closing thoughts before we ask the audience for some questions here?
No, I think I saw a question about other coins, and about just the last one, Ethereum, Litecoin, Ripple, etc. So why don't I pick that one up first? Sure. Because how are they priced relative to BTC? Would one buy those over BTC? So I think that the all-time dollar high, Ether just made a new all-time high, but prior to that, I think it was somewhere in the 1400s or 1500. And that's in dollar terms. But if you adjusted for Bitcoin, if you denominated Ether in Bitcoin, that high would be around $5,000, $4,500 to $5,000 was where the Bitcoin ETH exchange rate was in 2017. So Bitcoin has increased much more rapidly than Ether. So there's a new protocol, or new version of the Ethereum protocol coming out called Ether 2.0, where they're moving essentially, instead of mining Ether, in order to validate transactions, it'll move to what's called proof of stake, where you just have to demonstrate that you own it. So it saves a lot of power, environmentally friendly, and you'll get paid a certain yield for staking your Ether. And that yield should be about 5% per annum. It's higher now because there's just not as many people who have staked on Ethereum 2.0. So that will, as people take Ethereum 1 and put it on Ethereum 2, and it gets locked away until Ethereum 2 is formally launched, you're going to see a lot of supply come out of Ether. And then you've got the other fact pattern that it is the blockchain that all of the stable coins run on, and you've seen stable coins had a huge run up, and a lot of R&D from Visa and others is going into stable coins. So I think that that Ethereum looks like it's probably the other one that should be in a portfolio. Other than that, there are other projects That, Litecoin was a fork off of Bitcoin. It is able to process transactions at a faster rate, so it's a better payment mechanism, but really has never been used for much else than as sort of a speculative currency, from what I can tell. There's other projects like Filecoin, like Dot, that connects different blockchains that are really interesting, and you kind of have to really dive under the hood and understand them and do fundamental. It's kind of an anathema to some of the crypto day trade, but you actually have to go under the hood and understand these protocols to assess their value.
Yeah, and I would add on to that quickly that, like Dave said, Bitcoin and ETH have kind of shown some staying power and shown some actual real world use cases. There's thousands of other projects. Some of them may kind of become more mature over time, but I think beyond those two, there's definitely some interesting projects. But you're obviously going pretty far out on onto the risk curve, and I think that if you do, like Dave said, you should really dive deep under the hood to understand the fundamentals before looking into those other I mean, you should look into all of them, but it's going pretty far onto the tail on the risk spectrum there. So would proceed with caution with the flavor of the week and some of these new coins that pop up.
So David, Bryan, you guys have extra time. I'm the next presentation, so you can cut into me. I'll yield time to you. There's a lot of questions if you guys if you have time and want to answer them.
Yeah. Dave, you want to pick out one from
let's see. Unfortunately, we can't list active hedge funds that are in the space because for compliance reasons, I need to give you a list of all the hedge funds in the space. But please ping Bryan or I after the event, and we'll be happy to give you that as on a bilateral basis. And then there was a question around XRP being viewed as a security. So it's very controversial. XRP, I think what the Justice Department, I can only say what the Justice Department is saying. I don't want to take sides, but basically they're saying that XRP was just created to enrich its founders. And the whole thing about it being a payment technology came second after they realized that they may have basically created a lawsuit for themselves. I think that I think you need to start with what's not a security and then compare it to Ripple. So what's definitely not a security is something that no one controls, where there's no centralized authority. So if you look at Bitcoin and Ethereum, there really are no centralized authorities. You can't change the Bitcoin protocol. You can vote. Ethereum, the holders vote on changes. And then unfortunately for Ripple, they had essentially a corporate backing it that had a lot of treasury, sold a lot, and then the founders took a lot of money out of it, and then they created a foundation and tried to make it look like it was decentralized. So I think that's why it's problematic. Let's see, what else do we have? If all the banks move into the space, how would that impact Bitcoin? I think that the more access that investors have to Bitcoin, the more the demand there is, the more pressure there is upward, obviously. I mean, I think that, and the more transactions, then you're going to have, basically more transaction fees. You're going to see more mining coming into the space to compete for those transaction fees. And so obviously I think that's a great thing for Bitcoin. If banks do come into the space. Right now, PayPal, I think, has about 300 million users globally. And that was, part of the move of Bitcoin from 10,000 to 30,000 plus. And if banks come in, that you might see another move of that quantum.
I'm going to add on to that quickly as well, just to say that I think definitely, to Dave's point, the more access would absolutely increase the price. Some people might be concerned with how that impact like the functionality of Bitcoin as a decentralized network and all that. And I think it's important to note that because there are things where you could hold your own Bitcoin, there's other ways to circumvent bank systems if you don't want to use them. It keeps a lot of these institutions and infrastructure companies like BlockFi, for example, it makes us only need to offer services that benefit the end user, because if we are onerous in any way, or if we are building products that tack on unnecessary fees or anything like that, then there's no need for us to exist. So it doesn't necessarily replicate the existing system, just substituting dollars for Bitcoin. I think it creates optionality for users to choose whether they want to use these institutions or not. And either way, they can only really be a value add. Otherwise, there's no reason for them to exist.
Yep. Totally agree. I think so there was a question about, will other inventions of other cryptocurrencies is unlimited, so how would that impact Bitcoin? Well, I think there's also, it's the same thing. It's like, Coca-Cola and Pepsi. You can create any number of sodas that you want. But I think, at least until everyone became sugar conscious, Coke and Pepsi are still, the two biggest, and Coke is the bigger one. So the fact is, everybody views Bitcoin as a store of value, and it's become a reliable brand in a way. So I don't see that. I have heard of that being an argument, that it shouldn't have value, but I think that same argument can be made about anything. I don't have any thoughts on Nano, unfortunately. Any thoughts on China or other? So China, yeah. So I think people have talked about China and the fact that worried about that they might ban mining, or they might crack down. I think that China realizes that actually it's a very profitable industry, and that it creates jobs and adds a lot of value to the economy. What they don't like are stable coins, which allow cross-border payments outside of capital controls. And so that's why they want to create their central bank digital currency. We'll see how successful that is, as there's still billions, moving across the border, every month, at least billions. So I don't really see that necessarily as a threat. If the Chinese wanted to crack down, they would have already done so. Let's see if there's any.
I see one question on, does people moving Bitcoin to cold wallets have an impact on supply and its value? No, it doesn't really have an impact on the value or supply per se, but I guess if it sits in cold storage forever, then that would decrease the selling pressure, because it's just sitting there in storage, but it doesn't necessarily remove Bitcoin from the overall circulating supply.
Should we take one more, Michael? Is that?
You guys can keep going. So
Okay.
not to worry, I can shorten my presentation.
Okay. All right.
Hey, you want to take Jeffrey's question as an IRA? What is the best way to incorporate BTC into client portfolios, BlockFi, GBTC, etc.?
Yeah, sure. This is what I would say is that I think BlockFi, where we want to do more with our RIAs, we don't have a power of attorney where you can actually manage a client portfolio with BlockFi. We're working on that, because we'd love to have more RIAs on the platform, so that you can open accounts for your clients and just have them then delegate management to you. But it's not there yet. The other ways, obviously, is to buy a fund. GBTC is a good, was one of the only options up until recently. I think now there's a number of fund options that you can take a look at. I think things to be aware of is that where they trade in the secondary market, what the premium is. You don't necessarily want to pay up a huge premium to buy these funds, because they do trade at a premium. The fee matters. The fee probably, I think, matters a little bit less than the liquidity. I'd always rather trade fee for liquidity. So I think, there's a bunch of them that are coming out. And I think that, at some point BlockFi might also, have an offering in that space. But happy to, obviously happy to engage further on that and give you, more concrete direction, offline.
Yeah. thank you so much, Michael, for having us on. And if anybody wants to reach out to Dave or myself, definitely reach out. We'd love to have a further conversation.
Yeah. So just quickly, my email's David Olsson, OLSSON @blockfi.com. That's all one word. And I think, Bryan, what's your?
My email is Bryan, just my first name, Bryan, BRYAN @blockfi.com.
All right, guys, thank you very much. Thank you for sponsoring this event. It was great having you here today. Very interesting. Just so everybody out there knows, we will be sending out a recap of this conversation, and we will have contact information and a way for you to reach both David and Bryan. So guys, thank you very much. Thank you to BlockFi for being involved with Flyer and making this event possible. I really do appreciate it very, very much.